Walking the talk is what one can say about JSW Energy's performance almost every single quarter. But I'm not looking at it from a quarterly perspective, but what they've done over a period of 3-4 quarters in the preceding period and now. And this time around, I'm actually, while I usually look at long term, but this quarter's earnings give a small view into a bunch of things that could happen for the company going ahead as well. And that's what I intend to ask Mr. Prashant Jain of JSW Energy as he joins us today on this earnings conversation. Prashant, good having you and kudos on the number. Did you anticipate such a strong showing, or did some of this come as a surprise to you as well?
No, it's as per the totally scripted plan, because the power sector is very predictable business, because it's a long-term business and totally tied up, and other than the merchant part of it, everything is coming from the growth of the business. And the power sector was not in the limelight because there was not enough investments which were taking place into the sector, and also JSW Energy was also not growing because the sector was not growing that much. There was a overcapacity. But in last 2 years, we undertook this growth journey, and now that is showing the results, and that's where the earnings are going up. So it's on the predictable script.
Okay, let me try and talk about the few things that surprised the street at large and would love your view there. So let's start with Mytrah and the fact that you were able to do much better on the EBITDA front because of higher PLF, scaling up, what have you, earlier than the timelines that the street was working with. Tell us a bit about what's happening there, and are you slightly ahead of what you may have guided as well?
Yeah, we are ahead of what we have guided for most of the stuff. And because, we have a very strong execution capability, O&M capability. We have one of the best balance sheet, and all that reflect in our lower financing cost, lower O&M cost, higher generation, and better capacities put on the ground quickly. So in case of Mytrah, it played out absolutely like that. There was a lot of capacity which was down, which we put onto the stream very quickly. We reduced the losses, we reduced the O&M cost, all that reflected in higher generation, lower cost and lower finance cost by refinancing, and then everything showed up as a result.
Got it. How does this move ahead, Prashant? Because you would have some idea about, I'm talking about Mytrah right now, then I'll come to the merchant power piece in a moment. But with this in particular, for the next, let's say, 6 to 8 quarters, what's the run rate? What's the guidance? Tell us a bit about what happens next.
So on a fully loaded capacity, on a normalized EBITDA, we had guided to the street that FY25 EBITDA will be 1650 odd crores. And so we will achieve and do better than that next year. And a majority of that will be seen in the current year itself. So we are quite confident of doing better than what we have guided to the street.
Yeah, that must be music to the ears. You will do a majority of that seen in this year. You will do better than what you guided for. All of this is good triggers for both FY24 and FY25. So thanks for giving that clarity. The other aspect is something that you've told us a number of times, which is the power deficit that could come in because of the lack of thermal power capacities that have been added, and the renewable power capacities coming with a bit of a lag. Now, you benefited from merchant power sales in this quarter, presumably, and the street is talking about how your capacity, merchant power capacity getting commissioned very shortly will only add to the luster. Tell us a bit about both.
So, the power deficit is here for sure, and we are seeing double-digit power deficit on a peak power basis now, and that's going to continue because current year the power demand is up by close to 7%. Last quarter you saw 13% power demand growth. October month it is 19% up, and the grid is around 200 gigawatts. So if you are talking about this kind of a size, you need large capacities, and they have not been put up, and then this is putting a serious challenge going forward. So going forward, we see that the merchant tariff will be elevated for sure. But at the same time, we are seeing the fuel prices are also going up because international coal prices are going up as the oil is going up, and the capacities will be coming up with a little lag in next 2 to 3 years time frame. So 2 to 3 years there will be high elevated merchant tariff. With respect to in Bharat, which you talked about also, we will be commissioning as we have guided for. So 50% of the capacity, 350 megawatt, will be on stream in the current quarter, and next 350 megawatt will be coming up in next quarter. So all in all, right now we are having 850 megawatt of the merchant capacity, which will go up by another 700 odd megawatts. So totality, we will have close to 1,500 odd megawatt merchant capacity, which we will be utilizing in time to come.
Pretty stunning. Prashant, so therefore, just one quick follow-up. Could the growth from the merchant capacity be a factor of the capacities added and then utilized over a period of the next 4 quarters? Or would you envision, depending on the demand supply, maybe even better merchant power pricing over the next 12 months?
So we are not going to set up any merchant capacity on a by design basis. Whatever we are having, we will be utilizing, and but the prices will be little firm. That's what I can say. So whatever capacity we are having, that is going to contribute to some additional EBITDA margin.
Got it. Firm relative to current levels or better than what the current levels are, depending on demand supply. Again, just trying to understand.
It's very tough to call it, Neeraj, because it's quite seasonal. A lot of factors are going into it. But you can say what I'm trying to say is that firm as related to the last 3 years. So that's what you can see.
Got it. Prashant, now you've shepherded the ship so well in terms of the things that have happened thus far. There are a lot of optionality, I wouldn't call it optionality, sorry, but a lot of newer elements that come into the JSW Energy umbrella, green hydrogen, battery storage, so on and so forth. And these are large projects in their own rights as well. Tell us, when does the earnings profile, if I can use that term to simplify, look materially different from what it is looking right now? Does it happen starting FY27 itself, and will it be materially different from that year itself, or could it happen earlier or later?
So it will be around 27, 28 onwards only. Of course, our first project of green hydrogen will be on stream by March 2025. But that's a small capacity. The bigger capacities will be coming around 2027, 28. And that's where it will be meaningfully different. And also the storage business with respect to the pump hydro business, which will be coming up on stream by 2027-28. However, battery storage will be coming earlier by March 25. But you will start seeing the company quite different from 28 onwards with respect to a pure generating company to a product and services company and molecule company.
And Prashant, just one final word from a power sector captain's view. Do you reckon the sector as well starts looking materially different? I mean, last decade was a power sector which was defined by the thermal power capacity that each company had. I mean, largely, give or take. Could the power sector at large look materially different from where it has been for the last 15, 20 years, say 5 years down the line?
Absolutely, Neeraj, you are bang on. But I want to tell you one important view is that India is a country in the world which is the third largest power market, fastest growing in the world. And India has twin challenges. One is to meet the growth, and second is decarbonization. So these are the twin engines which will be firing the power sector to a different level. And because of which there will be a lot of action in next 10, 15 years.
And you reckon, I mean, I know your balance sheet is nearly pristine, still very well managed debt equity, but does the sector at large have the balance sheet capacity to be able to carry all of those changes out, or will the sector have the ability to get financing done at attractive rates to do all of the same? How do you think that angle works in as India looks to, or Indian power sector looks to do all of the things that you mentioned?
Well, there are different, apples in the basket. So there are some corporates which are quite delivered, who can propel their use their balance sheet to propel this growth, and there are some companies which are in some stress where the balance sheet is quite stretched, and if they want to pursue the further growth, they will have to either sell some of the asset, raise some more equity, and then try to grow. But it's going to be blend, and I don't think the capital is going to be constrained for a country like India, where there are such a big opportunities. Just if I put up on a on the perspective terms, yeah, you look at that, if the power demand is growing by 8% at 200 odd gigawatt of the grid capacity, you're talking about 16,000 odd megawatt of the net demand. And if you are meeting it with a blend of thermal plus renewable, you're talking about 40-50 gigawatt of the capacity addition every year. That means you're talking about something like 2.5 trillion to 3 trillion rupees every year capital expenditure in the sector, plus transmission, plus storage, plus decarbonization for the hydrogen and other stuff. So it's a large opportunity. So there will be a lot of capital which will be deployed into the sector going forward year on year for next 10-15 years. So that's the kind of a opportunity you are actually looking at.
Right. Prashant, thanks so much for taking the time out and speaking to us today, and all the best for the remainder of the year.
Thank you, Neeraj. Thanks for having me.
The pleasure was entirely ours, and viewers, thanks for tuning in.